Bruh, this what happened last week in the stock market. On Monday, we jumped up, then we start crashing down. So what to do now? Let's get straight to the charts, man. Let's get straight to the charts. What's good, YouTube? It's your boy Pre. Hit the dang intro, man.
We are controlling the future. Big dog. Big dog. Big dog. Big dog. Big dog.
The first thing I want to talk about is our core list. You know, if you don't know what's going on, we having a new salary cap. We have a team that we are creating, that we assimilate with our new list right here, and we have a core list. And if you want, let me pull that up for you guys. So this is our list that we got with our team that we start off with. We did buy some shares of TLT, and TLT kept going down. You know, that's part of the game. So again, this is a long-term investment. If you want to know more about this plan and how we got to this plan, please go ahead and check out this video before even checking out this one. So let's get straight to the charts. I want to get straight to the charts on this. So first thing we're gonna do, we're looking at is SPY, which is on our list, which is the same thing as, you know, SPLG. So we're gonna look on a weekly, man. We have sold, see this red candle, that means price has went down. So when we started off on Monday, we was around 433, and we down about $13. So it's about almost about 420, so about 421. So that's a lot of selling pressure for 1 week, but it's nothing really we wasn't prepared for that we didn't see coming. So one thing you want to do, again, let's go to SPLG. Let's look at our price target. So let's put our price target on the chart real quick. So our price target was 49.33. 49.33. 49.33. Here we go. That's close enough. So what we seeing here, if you could go down a little bit more, it could possibly even come down here. So this is support. So see these points, how many times they hit this line? Those are buyers or sellers are more important people waiting to buy or sell. So look at these as a wall. I call it as the floor in the basement. So when it goes above the ceiling, it becomes the basement, you know. So we're looking for some kind of support around that area, and we expect the spot to continue to fall till it get that support or hit this floor right here up in this general area. So that's what we're looking at. So that's kind of, you know, that's a big day. So this right candle right here is an engulfing, and if you was to do something like this, and we clone this, when we straight to the charts, man. We right straight into the charts today. You see it's kind of like a bowling alley. So you know when you go to the bowling alley and you have let me make it bigger for you guys. Wrong thing. It's like a bowling alley. So you know when you go to the bowling alley and you have those ramps. So this is the ramp it had hit. It hit this ramp right here, and now it's kind of busting down to this ramp right here. So around here, we expect some kind of buyers to step in. Right now, this is heavy volume, so this continue to go down. So we want to kind of buy our shares. Now, I did go ahead and buy because some reason for this ticker, the limit price orders will not be set, but everything else I'm gonna keep it as set. Okay, so I'm looking for price to come down here and show us something, but right now it's heavy selling pressure, and I'm gonna show y'all some of my top indicators that's kind of gonna give us another clue of when to buy, just to give us more confluences. Okay, and pretty much everything look like this. I want to talk about TLT. Now everybody know rates has been going crazy, man. You can literally get rates are up to about 5%. The 10-year rate last I looked was about 5%, man. So we haven't been here on TLT since 2007, and we all know the crash that happened in 2007, but we are at extreme points. Okay, so I did get in TLT right away, and we are down on TLT. TLTs, like I said, it's like we're not expecting really to make money, but it's more of a defense
Hey man,
mechanism.
this is just a
So
reminder.
it
Do your
is
own research.
completely
This is
down.
not
You know, you
financial
can even
advice.
want to average in. So
Please do your
again,
own
if you
research.
put this
Investing has
on
considerable
the
risk. Please do your own
on the points right here,
research.
you got these points. This is support. So hopefully we'll see if it gives a bounce up in this area right here and see what happens on TLT. And TLT is literally down 51%. That's crazy, right? So 51% from its all-time highs. And this is inverse to the rate. So basically when things start to shake, like unemployment to go up, jobless claims go up, those type of things, you look for this to reverse. Okay, because that's when they have to slow down on increasing the rates. Next we have XLV. Let's look at XLV. Okay, what's our target on XLV? Let's look at it. XLV, our price target to enter is 124. 124. We are close. We're about $8 away. So we put this 124 right here. You know, we are patiently waiting. If it don't hit our price, then cool. But we are waiting on this support level right here. Come pick us up. But again, you see it engulfing. So when you see it engulfing with a lot of volume like that, that's most likely mean next week. Anything can happen, but most likely next week we're gonna have a red day, a red week. And again, if you want to put those ramps on here, and I'm just gonna draw these real quick. And we're on the weekly. We are on the weekly because we are long term. So we're looking at the overall trend and the move. This is the guide rails. So I wouldn't be surprised if price came right here and hit this next week. Again, this is engulfing. You got a lot of volume here. People are scared. Look for that to happen, you know. SMH is our MVP, was our player. Again, another engulfing. It's eating this candle right here. We have a lot of volume. This is huge, okay? So again, our price target for SMH is 135 to start to enter in. Okay, so we want to start to nibble. Now this is where we will begin our position at for SMH is 135, right? So 135. And I'm gonna go ahead and mark these on here so we can know going forward. We want to at least get in around here. Style. Cool. And the site that I'm on is called TradingView. So TradingView.com, they have a free version you can get on, so you don't have to get the paid version. So one thing I want to tell you guys about, if you're looking at charts, so I'm gonna go ahead and take this, make this a different. Alright, so one thing I want to tell you about charts is, first off, you see these little gaps right here. 9 out of 10 times these gaps get full. So that's what we plan, or we want our entry to be, is these gaps to be filled. So that's also from the height of what it's been on, that'll be about 15 to 19%. That's the zone that we want to be able to buy. So I'm gonna put our buy box in here. That's what we want to buy. Okay, so that's what we want to look at buying in our for our portfolio and for our team. So these gaps, we looking for a price. If it get up below here, it should fill all this and come up in this area for sure. Then found support. So that's kind of what we're looking for. And again, let's draw those rails on here so we can have it for next week. So boom, we can do something like that. And all I'm doing is trying to touch as many points as I can. So a point here, a point here, and a point here. So it's like, just look on the lines, make it easier. Okay. Every time it touched this, when it touched this, it went here. When it touched this, it went here. You know, basically. And then when it touches here, we expect the pattern to continue and it touch here. Okay, and again, here is our zone of our entry, our first entry for SMH. So that's what we're looking for. Again, an engulfing candle, a lot of volume. So that means that price should continue. Okay, so to just give you an example, Let's see, a good one. So this is a good one right here. So this is a candle. This candle eats this one, so it eats this entire body of this. It's called engulfing. The next pattern should be further down. Now I ain't saying this exact thing gonna happen, but anything can happen. But it should be another red day. So we expecting more red and more pain based off of this candle. Okay, so even with this candle right here, this is called a shooting star, right? Yeah, I think this is called a shooting star. So it went up, buyers tried to buy it up, and at the end, sellers sold it down, and then you have continuation, which is engulfing. So they're just saying, yeah, it's going down, right? So we hopefully, and that's what you want. You want it to come down and hit your targets, right? So we want to hit our targets. Okay, next one on our list is XLK. And you can see all this stuff is moving the same, right? So, as the tide lift our boats. And when the tide go down, all the boats go down too. So that's the same thing with the stock market in general. So again, you see the engulfing. And what's our price target? Let's draw a price box. Price target for XLK is 151 for this for our salary for our team. Okay, so we're expecting to get $151. So that's in here. We're gonna say 140. It's just gonna be our box right here.
Do your own research.
Okay, let's see how much that's down. That'll be down
Please do your own research.
here.
Investing has considerable risk.
So that's what we want
Please do your own
to come and hit this support. Okay, so let's draw our bowling alley lanes, and we clone it. And then it'll be something like that. Okay, so again, it hit here, boom, hit here, then went down here, hit here. What you expect to happen next? It hit here, right? That's the next thing, right? So we'll see what happens. Anything can happen, but again, engulfing, we have an engulfing. Volume is increasing on the way down. So it could get ugly. It could get ugly. Okay, so that's our list, and that's what we're looking at. Now I want to tell y'all my top indicators that I look at for buying or knowing when to sell puts, or just things I am watching right now. The top things I'm watching right now is, so first thing I'm looking at, and what's a leading indicator. So like I told you about TLT, I'm looking at jobless claims. Jobless claims is a lead indicator of possible recession on the horizon. And usually when this start to peak up, that's when things are starting to get bad. And what's jobless claims? That's people filing for unemployment, right? So that's one of my favorite indicators I'm looking at. And basically TLT probably won't start going off until this start going up, unfortunately. All right, so this kind of like protection. So if people start losing jobs and they start flowing into the system, so whatever, that's more likely for a recession. As you can see, these big spikes, and let's just compare it. Okay, so let's look at it, and let's just mark every time that the jobless claims, again, how many people filing for employment every time it spiked. So it spiked here, all right, big spike, spiked around here, big spike, it spiked around here, big spike, and it spiked around here. So once unemployment start to go up, ain't nothing stopping it. It's hard to get it to go down, right? So it takes a while. It is just gonna shoot up and go crazy, as you can see. So let's put that against the, see what happens when these happens against the SPY or the XPX index. Cool. So as you can see on these lines that we just did, look, crashed, recession happened. We all know about the 07-08 recession. 2000s crash. So it's a lead indicator of a recession. Okay, so that's what I'm looking. That's one of my indicators.
Hey
And we
man,
just
this
getting
is just a
started. It's
reminder.
just one.
Do your own
That's
research.
just
This
one.
is not financial advice.
Another one I'm
Please do your
looking
own
at,
research.
of course, is
Investing has
unemployment as
considerable
well.
risk.
Another one I'm
Please
looking at
do
is
your
the 10
own
year.
research.
Okay, the 10-year rates. Okay, so we all know about how the Fed is increasing rates. All right, so what we're looking at on here is how is this moving, right? So right now we are at levels that we haven't been since 2007, and we go into numbers that we have already seen. And what happened in 2007? A crash. It was a recession. Now I'm not saying that's gonna happen this time, but the cycles are in line, and we don't. That's the phase that should be next if we're going technically off the cycle. So I want this to start coming down, right? And when it start to come down, again, that would mean probably jobless claims are going up. Okay, that means we're getting closer to the recession part. Call. If you on TradingView put in MMTH, this tell you how many stocks in the S&P 500 are trading above the 200 moving average. The 200 moving average is basically like a real common moving average that it's like a long-term trend line. If it's above it, if companies are trading above it, then they're long-term on an uptrend technically. But nothing is discrete or just 100%. So, but yeah, so I'm looking at this. This tell me how extreme we are, right? So once we get to these levels, and if we go on a monthly, once we get to these levels around here, which is we counted there now, and here, which is really extreme. So this is saying at this point it is 27%. I'm gonna make it bigger for y'all. 27% of the stocks in the 500, the S&P 500, are trading above their 200 moving average, or up on an uptrend long term. When things get bad, is when others get greedy. That's when you get fearful. When others get fearful, that's when you get greedy. Okay, so a signal for us is when it get to these levels, which is kind of already getting to that point, and get in this zone here of a lot of companies up under the 200 moving average. This is a leading indicator or an indicator for either a bounce or a shift in the market. Okay, so when it get to these extreme levels, okay, this is what we're looking for to maybe buy some of that's on our list, even if it's not at our price target, right? So we getting in up under here. I like that for us. Okay, so again, this is the amount of stocks that's trading above the 200 moving average. This is something I really look at and I like to pay attention to. Yeah, so cool. Let's look at what it looked like compared to here. So again, every time I get in this box, and let's draw a box here. Let's say this box right here. Every time I get in that box, it could be a good opportunity to start to buy. Okay, so let's see. Let's test it. Okay. We got in this box here. We did this right here in the SPY, and then we start to reverse. We got here, and we start to reverse. We got in the box. We got in the box. We start to reverse. I can't. Man, this is sauce, man. This is sauce, bruh. This is sauce, man. Quit playing, man. Right here, we dipped. We recovered. We got in the box. We recovered. We got in the box. We recovered. Stop playing with me, bruh. This is sauce. We got in the box. We recovered a little bit. When it get this low. Okay, so even if you got in here, just know what you're getting in at. Like what's how many months? You know, if you're a long-term investor, even if you got in here, you know how extreme that is. That means the market is really oversold. Stop playing, bro. This is sauce. Just by this alone, we can just use, like, again, a key indicator. This is sauce. We almost there now. This is sauce, bruh. This is sauce. Stop playing with me, bruh. All right, that's just one of the indicators. We got another one, man. Bet. All right, this one right here is how many stocks are trading above the 50. Now, the last one was 200. This is 50. 50 is 200 is more long term. 50 is more mid term, right? So 50 moving average. Okay. Again, let's go with our boxes. About here to here. So we're gonna do a box from here to here. So basically 15% of the stocks in the S&P 500 are trading above the 50-day moving average. Okay? So when it gets in this box, this is a time where it can be kind of extreme. Okay? So this is more near term. So this is not as rare compared to the 200 moving average, because the 200 moving average is more long term. This is mid term. But let's see how it fare against the SPY when they get in this box. Right. Again, this is the monthly. So this is, you know, it's not just going to straight away go up, you know, or in the history past time it didn't go up. So the more it go down in here, the more the bigger the opportunity is. So since 2001, it got to these levels extreme right here at 1, 2, 3, 4. 4 times since 2023, bruh. I mean, since 2003, bruh. So what that mean, Pre? Show 'em, bruh. Show 'em what that mean, man. Show 'em what that mean, man. When it get to those levels, bro. Sauce. Oh, my bad. Show 'em what they mean, bruh. When it get to the level, man, it's sauce, man. Boom. That's the bottom. When they get to the extreme levels, it's close, right? Even right there, it's a bounce. It's a bounce. Bro, these indicators are crazy, man. It's a bounce. Now, this don't happen often, so when it do happen, you should know what's like. You should know. Bounce. Again, this is the 50, so this not as rare as the last one, but if we get to those levels, be on alert. It's not a time to be afraid, right? So, like everybody else. And we in those levels now. Okay? Now we're going to go to this is the 20. Okay? Again, that means how many are trading above the 20-day moving average. All right, we're going to go here. We're going to draw a box. Let's go ahead and draw a box around here to here. Okay, so as you can see, it happens more often. This is really, really short term. Really short term. Okay? So this is what we're looking for. This is another indicator right here. So again, once they get to these boxes, it usually do like a small pullback after that. So when they get to these boxes, you know, up here. Okay? So the way I use this is when all three are giving me the green bean, when all three are in here, it's time to look for our setups and look for our, you know, what we are. It's time to execute when you look at all three. Now, if you get two, I even like these two right here. When you get both of those in there, I'm expecting a bounce. Okay? Anything can happen. That's just the way I look at it. You can use this however you want to, but this is sauce. And I'm not even done yet. That's not even my best one, man. I'm not even done yet, bruh. We got the PCC, man. So this is the put to call ratio, man. When this start to get up here, when people start to put a lot of puts in the system, and this is a little more highlight, that's when you kind of be skeptical, right, of what's going on. Okay, so I'm gonna explain a little more on that. Can't give y'all everything today. Can't get, but I'm gonna give y'all my number one best indicator for this recession, what's coming up, and what I'm looking for the most. Again, going back to the yields, which is the yields. Oh, I got one more. Fear and greed. Fear and greed. But I'm giving y'all too much sauce for free, man. Too much sauce, bruh. I just Google fear and greed index. When this get to extreme fear, which we at fear right now, 26, we at fear right now. When other people are fearful, be greedy. Be greedy. When other people are greedy, be fearful. So this give us a sentiment of the market, how they feeling right now. And it's pretty accurate. What's unique about this is Warren Buffett, who's like the LeBron James of investing. That's his quote. When others are fearful, be greedy. When others are greedy, be fearful. This is an indicator to let me know where people thinking, how they're scared, or if they're afraid. So when you start to see all these indicators, extreme fear, and then you have these indicators here that's in your green box or your orange box, and here, that's when it's time to shoot. They leave you open, bust they head. That's when it's time to shoot. Bruh, this is sauce. This shouldn't even be free right now. This is sauce, man. And you just execute from there. But the main number one indicator that I'm looking at right now is the yield inversion. Okay? So when you take out a loan, or if you get a bond, buy a bond, you would think that if you have a 10-year bond compared to a 2-year bond, the 10-year bond should give you more interest, because you're holding it for longer. They have to keep it for longer compared to a 2-year. Right now, that's not the case, and it hasn't been the case since July last year. That means the yields are inverted. When the yields are inverted, it is a signal. Historically, it's a signal that the economy is sick. Something sick is happening. It's a leading indicator that something sick is happening to the economy. Historically. Now, I'm not saying this is what historically happens. Okay? But the thing is, it's not about the inversion per se. That's just a warning. But when it uninverts, that's when the pain comes. And this graph is telling me once you get up under 1%, the yields will uninvert. That's when a recession most likely will be called, or announced within some kind of time frame. I got to give y'all the stats on that, but I think it's like 6 to 8 months, something like. But it's real close after it uninverts, right? I'm talking about big drops, y'all. And I know they can be scary, but that will give a great opportunity for a new investor, right? So let's see how it compares to the SPY. What happened to the SPY when it uninverts? Okay, so this is a little one right here. Even for COVID, when it uninverted, you got this big drop right here. Okay, so down here is the SPY. So you got this big drop right here. Okay, it uninverted. Now, sometimes it don't happen right away. So I'm not saying it's something that's going to happen right away. So it uninverted, it didn't uninverted again. And then when it came out this time, this what happened. Again, if you want to know the biggest drops and craziest time in the market, look at 07 to 09 that time, and look at 2000 to 2003. See what happened, right? Again, when it uninvert, this is what happened. Anything can happen. This is like it uninvert. This is what happened. This is a long bear market right here. I'm not saying that's gonna happen this time, but I'm saying be ready. And this is my number one indicator I'm looking at, because when it gets to this point, I am looking to pay attention to what's happening. Okay, are we seeing when this uninverts? Are we seeing jobless claims go up? Is unemployment going up? People losing their jobs? Just different things. Our people are not hiring anymore. Our companies not hitting their profit targets. That's what I'm looking for. is hourly wages or hourly average works. People average work hours, is that going down? That's what I'm looking at. And this is the key. It can be spooky times, but when you ready and prepared for it, what we spooky about? If we know you finna jump out that door, then what we scared of? Bruh, what we scared of, man? This is game, bruh. This is game. Stop playing with me, bro. We straight getting to the heat, man. Forget all that other stuff. We getting straight to the heat. And if you ain't on board, that's just you, bruh. We getting straight to the heat. If you missed the opportunity, that's on you, bruh. We getting straight to the heat. We getting straight to the heat. We done playing, bruh. If you scared, get knowledge and master the information, bruh. No, we not scared. We coming. We know what's coming. We not afraid. Come on, bruh. We done playing. We done playing. Play if you want to, bro. We know what's coming. We can see what's coming. If we prepare for anything. Now, I'm not saying it's just nothing is guaranteed. But if you prepare for anything that happens, what you got to be is scared when everybody else is fearful. When everybody else is fearful, we ready. If they leave you open, you better shoot. If they leave you open, you better shoot. Us as a community, we get too caught up in not even playing the right game. We trying to hoop, but this is the hoop. This is the hoop. And they leave you open, you better shoot. And everybody talking about that dog. You got to have that dog to understand this information, bruh. And it's just execution from this point. No, sir. It's just execution from this point. So we're going to follow our plan and see what happens, man. Like I said, we getting straight to the charts on this one. And I'm just going to upload this how it is, man. We getting straight to the charts. And I'm out, man. If y'all, man, make sure you like and subscribe, man. We going to be going over. I'm trying to do this every week and go over these charts, man. And let's see how we predict and how it goes, man. And if you have any questions on what I'm talking about, leave a link. Comment down below and just let me know what you want me to go over, or you need some more explanation on it. But man, let's get to it, man. Let's see what happens, man. It's interesting times, and just be prepared, and continue to apply that pressure.